to continually move that bar of productivity, of efficiency, right, using the latest and greatest technologies. That's really the essence of entrepreneurship. In a lot of ways, I think problems are eternal, right? Technology evolves in the sense that what we are trying to solve here, when I talk to some of the companies, is still basic stuff like how do you get people to be more efficient, right? How do you get markets to be more efficient? Whether it's lending or whether it's transportation, right? These are the problems you're solving. These are eternal problems, right? They have been solved in different ways with different technology waves, right? So today the tools that we have are different than the tools that were 20 years ago, and I think that's essentially what entrepreneurship is all about, right? It's to continually move that bar of productivity, of efficiency, right, using the latest and greatest technologies. That's really the essence of entrepreneurship. For me, really, entrepreneurship is about problem identification more than technology. Actually, I don't care about the technology, right? What I truly care about, and this is my product management roots, is are you accurately able to identify the customer problem and move the needle in terms of value significantly, right? Not incrementally, significantly, right? Now, India is lucky. I'll say this in an ironic tone because it has a lot of problems that need to be solved, right? This is a problem-rich environment. There's so many things that can be improved, right? When you're sitting in the Bay Area, sometimes you look around and Peter Thiel had this sort of interesting quote where he said, all this brain power in the Bay Area and the innovation we've delivered is a 150-word tweet, right? Effectively, what he's saying is you're using all this brain power to essentially create a platform for tweeting as opposed to solving real world problems. Well, you guys as entrepreneurs don't have that issue. You have real world problems that can significantly improve people's lives, right? Efficiency, in this economy that you're in today. And as one of the entrepreneurs saying, if you solve the problem here in this environment, you have a dramatic advantage globally because of the cost efficiencies that you're able to solve it for. So I'm going to keep this brief. So essentially, look, this is an exciting time to be an entrepreneur. I think we've dramatically lowered the cost of what it takes to build platforms and products thanks to innovations such as the cloud. And I think it's the time when people are open to new solutions, irrespective of whether you come from a startup or you come from a big company. It was not the case before. And I think the future is ahead for you. So excited to be here and look forward to your questions. Yeah.
How did WeWork's valuation change so drastically?
Yeah, I was waiting for that question. Yeah, sure. Look, I think there is a definitive gap between private markets and public markets, right? And in the private markets, I think investors, primarily folks like us, are willing to basically buy the vision of the entrepreneur, right? And what we invest in is more sort of that the aspirational goal the entrepreneur is trying to drive to, right? And our goal is to be able to provide them the capital so they can achieve those goals. Now, when you make the transition to the public markets, the metrics are very different, right? And the metrics are very well defined, fairly or unfairly, right? And you can kind of look at that and say, how does it make sense for this company to be valued at whatever 17x versus another company is generating all this profit valued at 6x? They are what they are. The public markets are much more diversified because the investors are in some ways more sophisticated, some ways less sophisticated, right? We as individuals can buy the stock in any public market, so we are investors. At the same time, you have mutual funds and pension funds and such like, which are very sophisticated investors who also buy these stocks. So there is a definitive gap in the way private investors view assets and value assets, where there's a lot more value for vision, strategy, potential, whereas public markets are more about, you know, numbers, profitability, like real metrics. So I think, you know, it's always a tricky jump between those two, right? And in WeWork's case, clearly there was a much wider disconnect between the private and the public markets. And so as they filed their S1 and started to approach the market with their metrics, the public markets kind of reacted negatively, which is kind of what caused that, you know, valuation. Look, you know, markets come in cycles, right? And, you know, you can see valuations over a period of time. Right now, even in public markets, valuations are at the highest levels. They're almost, you know, the mean valuation of companies at almost 12x NTM, 12 months revenue, forward 12 months revenue, right? Whereas the 15-year average is around 7x, right? So markets, it was at 15, it's come down to 12, but it's still high, right? So, you know, for us as private investors, we're a 10-year fund, right? So essentially, our expectation is that we invest with the company for 10 years. Not most companies, you know, take 10 years to kind of get to public markets or whatever, but that's our assumption. So we're in this for the long haul. At the same time, I think, you know, the experience with WeWork has definitely informed the way we view our filters, right? So, you know, we do need to make sure that companies, now in my space, in the enterprise SaaS space, I don't have this problem because SaaS in general is a well-proven model, right? I mean, it's a recurring revenue model. Consumer models are much more challenging because consumer models effectively sometimes are winner-take-all models, right? And you have to invest very extensively up front to be able to get the market share, to get your unit economics up. So these markets behave differently. You know, we learn. I think the one lesson that I've learned in the 18 months as an investor, as opposed to being sort of more on the operational side, is that as an investor, you're humbled every day, right? That's the only truth. So effectively, you know, you learn lessons every day. So we don't know, right, what we don't know. And so, you know, these kind of things happen, and as they happen, you learn and you move on, right?